Well, today I want to talk to you about what's going on with interest rates, how it affects you as a buyer and real estate investor, and what changes you should expect with rates moving forward. Hi everyone, my name is Alejandro Ventura. I'm a real estate broker here in town with Keller Williams, and my goal with these videos is to help you be an informed participant in the buying and selling of real estate here in Spokane. Now, as you may know, mortgage interest rates have been rising throughout the year, but even more rapidly in the last 7 weeks, as they just went over 7%. So here is how you make sense of what's going on with rates. Number one is inflation. Inflation is what's driving mortgage rates increases. And in this chart, you see that inflation and mortgage rates historically move together. When inflation goes up, mortgage rates follow. And when inflation goes down, mortgage rates also drop. And there are a couple of reasons for this dynamic. And one of them is that the investors who make it possible for you to get a loan on a house want to see a return on their investment above inflation levels so they can protect their buying power for as long as possible. Now, going back to the graph, you may have noticed that inflation rates began to take off when the pandemic started in the summer of 2020. But the Fed kept interest rates artificially low at about 3%, which of course disrupted the correlation between inflation and mortgage rates. Now the Fed has since acknowledged that that was a mistake, and now they're trying to correct it by raising rates as fast as they can. And this is why you are seeing rates go up as fast as they have. Now, how do these rate changes affect you as a buyer and real estate investor? And for that, I'll use numbers to illustrate. And let's say that you are looking to purchase up to $350,000. And when you initially got pre-approved for this amount, your rate was, say, 5.5%, which made your monthly payment $2,300. Now, today, after a few rate increases, your new rate is 7%, which makes your monthly payment now almost $2,700. And because of your debt to income ratio, you cannot afford the additional $400 a month in your monthly payment, which means that you are now officially priced out of the $350,000 range, and now your $2,300 monthly payment only buys up to $300,000. So to put it more succinctly, the higher the rate, the less you'll be able to afford. Now, this contraction in affordability for residential buyers creates a great opportunity for you as an investor, because now there is less demand for homes on the market, which results in properties taking longer to sell and sellers having to reduce their prices to attract buyers. And here is where you come in and now have the leverage to negotiate for a lower price point and overall better terms, so you end up with a profitable investment property. Now, what changes should you expect with interest rates moving forward? Well, for a residential buyer, say a first-time home buyer, unfortunately, it's going to get worse before it gets better, as it is expected that the Fed will increase rates yet again at their last meeting coming up this November 2nd. Now, remember that mortgage rates follow inflation. So to have a sense for when rates will eventually come down, keep an eye on inflation. And the moment you start seeing inflation levels go down, then it is likely that the Fed will also revise their policy and adjust rates down as well. As to when that might happen, well, Barry Habib, mortgage and housing expert from MBS Highway, who has fairly accurately predicted all the changes that we see today in the housing market, believes that we're going to start seeing a consistent downtrend in inflation in Q4 of this year into Q1, Q2 of 2023. Therefore, he expects interest rates to go down in that time frame. And of course, we'll see what happens when the time comes. All right, I hope you found this information helpful. And for any questions or comments, please don't hesitate to call. I'm Alejandro with Alejandro Ventura Real Estate. Thank you for watching. Make it a great day.